Hey guys, here's the brutal reality. When CNBC tells you about it, it's too late. So if you're a stock trader, an options trader, okay, and you're getting this, okay, 4:01 p.m. on Wednesday, October 10th, after the market actually plunged 800 points, that's when CNBC wants to let you know about it at 4:01 p.m., right? Oh, Amazon dropped. All the tech shares dropped. The market dropped. Where were they yesterday? Why weren't they telling you yesterday about this? Well, guess who was telling you yesterday about it? We were telling you yesterday about it if you were a subscriber on our channel. And I'm actually going to show you specifically how you can do this without even being a subscriber. So here's the deal, guys. Anyone can predict these moves. It's all about the charts. I'm gonna show you. Okay, so the market plunges 800 points. Big deal. It's old news now. The main question is how you could have known about this yesterday if you're a stock or an options trader. So this is exactly the question we're gonna answer in this video, and we're also gonna answer the question: should you buy this dip now? So let's start with this. Okay, so Amazon dropped 115 bucks, Dow Jones 827, S&P 100 bucks, Nasdaq and so on. VIX hasn't been to a level of 22 since about February, April time, okay? So good to see you again, Mr. VIX, at over 20. The question is, if you would have known this, if you would have known that this was going to take place today on October 10th, if you would have known this information yesterday, knowing the size of your account, knowing, okay, how the options were priced yesterday, how much would you have made? Now, I'm going to let you guys answer the question on that because everybody's got different size accounts, but overall, it's all about a percentage of return, okay? And generally speaking, our channel Market Crash 2018 is not called because we're necessarily expecting a huge market crash in 2018. However, the prospects of that, even to people that were denied it for a very long time, are clearly becoming more and more real at this point. So the reason for calling the channel Market Crash, I get this question all the time, is 90% of our trades are designed to profit when stocks fall. And the general rule is this: stocks fall a lot faster than they climb. In other words, it could take a stock to climb from 60 to 120 bucks. It could take that to do maybe a year, maybe 6 months for some stocks. And then it could drop 30 bucks literally within a matter of a day or two. Okay, so the question is, how you could have known that Amazon was going to drop 100 bucks today? Let me show you. Let me share some little details here with you guys, okay? So there is a way to actually do this. Here's what we send out. Let me show you the result first of what we were able to do for our alert subscribers, okay? Yesterday, on October 9th, okay, as you can see, at 9:50 in the morning, we sent out the alert to buy Amazon 1,800 puts when they were trading at about $10. Now, by the close of today, guys, these puts were worth in the neighborhood of 50, 60 bucks. That's about 500-600% gain. Not a big deal. Nothing actually compared to this trade right here taken on BLK. We sent out the alert to buy 460 puts, which time we're trading around $3. And the time we sent out the alert was at 10:05 yesterday, October 9th. The price of BLK was $465. I'm going to show you a chart in just a second where it ended up. Actually, I'll just tell you right now. What the heck? It ended up in the 420s. So for every $300 that you would have invested, you would have gotten back over $3 grand. One more time, we send out to our alert subscribers at 10:59. We said yesterday, buy Amazon puts, when the current price was at $18.89. We also made some market commentary because this is how we get our news. We don't get it from CNBC. We don't get it from anywhere else. We study charts, and there's clearly some things in the charts that we were observing, and some of the things that we observe are proprietary, such as our 13 markets move formula, which made us believe that we were expecting to move yesterday, last night, going to the close of 11:06. So we also noticed the market was trying to go higher on a very lower volume, which is a very bearish sign. So we're actually texting our subscribers, look, sell off after 2 p.m. is coming. And more importantly, we said that a gap down tomorrow. Tomorrow meaning today, October the 10th. Gap down, for those of you who may not know what that means, is that the market is going to open up lower than it closed the previous day. So clearly, if you try to make money on stocks when they fall, that would be a desirable type of situation. Okay, also, here's some other observations we have made, okay? at 12:31, we sent another alert saying that, hey guys, target price on Amazon is still at $17.76. So actually, this was our first target price for Amazon today to reach a level of $17.76. That was sent out yesterday at 12:31 p.m. Now, we sent out the alert saying that, look, that's roughly about a 5% drop from the current levels of $1,880. Now, we also noted that it could hit a low of $1,750 if volume accelerates. I'm going to show you the chart actually that did exactly just that today. Now, Amazon 1850 puts, we're actually recommending to buy them at $15 yesterday. So for those of you that may not trade options and maybe have never done that, $15 put literally means that the cost of these options would allow you to temporarily own 100 shares of Amazon. So it would be impossible with just a $1,500 investment for you to buy clearly 100 shares of Amazon. But with utilizing options, you would have been able to use $1,500 to control basically 100 shares of Amazon. You would have been able to profit when Amazon shares dropped. If you're curious how to do that, if you've never done it, if you've only been trading stocks, okay, just click some of the links below and get some information below this video in the description, okay? So anyways, we sent that alert out, okay, when Amazon was trading at $18.77. We set target price $17.76. Now, for those of you that might have taken the trade, you know that by the end of today, by the end of the close of the trading day today, these puts were worth $100. So literally, for every $1,500 you would have invested in each put, you would have gotten back $10,000. Now, here's some other things that we've texted out, okay? It appears financial institutions are selling themselves. This is kind of a bit of a sarcastic statement because the financial institutions are starting to report earnings with this Friday, JP Morgan, Wells Fargo, and so on. So we actually said we're very bearish on BLK. And as you noticed earlier, we did send out the alert on BLK, which actually produced over 1,000% return today. JP Morgan and Goldman Sachs. So we noticed that general selling began right at the top levels before it actually became clearly apparent. Because if you've been watching like CNBC, that's all they talk about is how, you know, financial stocks that are such a bargain and they keep buying them because they're such a good deal, right? Well, we use that alternate strategy, which is simply profiting when stocks fall, which in this type of market environment clearly is a way better deal than trying to say, oh, the thing's just going to keep going higher astronomically, as people were saying with Bitcoin in 2017, which, by the way, we were bearish. One of the first videos we posted on this channel was talking about shorting Bitcoin when it was hitting 18,000, 19,000. Of course, nobody wanted to listen to that. So maybe if you were one of those people, maybe this time you will listen so you can have a more profitable trade in the year. All right, moving along. Goldman Sachs 220 puts. The alert went out at 12:50 p.m. Now, this trade was making close to 400-500% by the time the close today. Had a target price of 212. Currently, the stock is trading at 214 after hours. We got into the trade when the stock was trading at 223. Alta put's probably the worst trade, okay? Still made a little bit of money, but not as much as some of the other trades. Alta only dropped about $5-6 today. Now, keep on Amazon puts. Look, if you're a subscriber, guys, all you have to do is take action on these alerts. As you can see, we were so bearish on Amazon because we've studied the charts of it, you know, day and night as we study these charts, okay? So when we're bearish on something, you'll clearly get multiple alerts throughout the day so you can take action. So we said again, keep buying Amazon puts. That was yesterday, October the 9th. Buy at 1 p.m. Okay? Now, probably more of an interesting observation because, you know, we've nailed Amazon so many times on the short side when everybody was so bullish. So that's nothing new to us here at Market Crash. But bigger market sell-off should start around 2 o'clock, 2:15. That was sent out at 1 o'clock yesterday. We also noted that market has zero chance of going higher if financials and tech companies continue to sell off. So clearly that's exactly what happened today. We also put a recommendation to keep positions overnight. So if you were trading options, a lot of times you're faced with a decision, oh, should I get out of my positions? Should I keep it overnight? Should I do this? What should I do? Okay, so we actually told you specifically what to do is to stay still, man. get 6-pack of Coronas and enjoy life. Watch the show, okay? So keep positions overnight. Don't close anything. All right, what else? Oh, yeah, one last thing. VIX could hit 20 by tomorrow. And guess where VIX is today? The VIX is at 22. Now, the cool thing is we predicted that yesterday. So you may be thinking, what the hell? Are you some kind of fortune teller? No, guys, I've been trading stocks and options for 13 years. And over the course of the first few years where I was losing a bunch of money, I finally started figuring some things out. So if you're curious to learn how to become a better trader, that's what this channel is about. I've recorded a few courses you can take advantage of by clicking some of the links below this video and getting some more information. Now, interesting observation yesterday also. Here's another thing we actually observed. Bill Ackman took a substantial stake in Starbucks. So this is one of our sort of what we call a correlation type trade. Knowing that Bill Ackman actually had a substantial stake in CMG, or Chipotle Mexican Grill. The moment I discovered that this announcement was true, and he did accumulate almost $1 billion stake in Starbucks. Well, his fund only is about $3-4 billion bucks. Okay, so it would have pretty much been impossible for them to accumulate this type of significant stake in Starbucks without completely liquidating his CMG stake in Chipotle Mexican Grill. So as soon as we found out it was true, we sent out the alert saying, look, expect CMG shares to start dropping by the close. Current price, 450 bucks. It's not too late to go short. And so we advised, literally 2 minutes after we sent that, to buy 440 CMG puts, which were trading at the time at $2, and suggested the stock was going to drop significantly lower, and it did. Those puts literally produced roughly 450, 500% returns today. So the result of the Blk trade, let me review that real quick. October 9th alert we sent out right here, guys, when Blk was at 465. Now, this was yesterday. Today, Blk, at least at the time this picture was taken, was at 428. I think it probably is trading a little bit under that, maybe in the range of 425, 426, as I'm recording this video after the market closed. So this is, guys, this was an easy 1,000% return. Actually, this was over 1,000% because at the time of the alert, when we sent it out, the 460 Blk puts were trading at only $3. So you could have invested 300 bucks, and by the end of today, you would have had roughly 3,200, 3,300 bucks. Now, for some of you that have larger accounts, right? I mean, if you're working with a couple $100,000 account, look, what if you bought 10? What if you bought 20 of these things, right? So 1,000% return is 1,000% return, no matter how you slice it, no matter how small or big your account size is. Okay, moving on to the results of the Amazon trade. So Amazon reaches first target price of $1,776. Now, guys, I know you're going to say, dude, I mean, what's the big deal? Amazon fell 100 bucks. Okay, cool. Let me ask you this. Now it's apparent to everybody that Amazon is dropping. How apparent was it yesterday when it was actually, when the market opened, it tried to go higher? See, and this is where comes the psychology of short selling, right? This is actually when you want to short, typically when something actually moves higher. A lot of people do exactly the opposite. Well, the problem with doing exactly the opposite of that is a lot of the put options, they become significantly overpriced. So yesterday, these put options were cheap when we were trying to buy them when Amazon was trading around 1889. We were also buying them when Amazon was trading around 1868. We're also buying them when it was trading around 1877. So if you were just taking action on any one of those alerts, you would have been a very happy person today. Let's just put it that way. Now, here's the cool part is Amazon reaches second target price, which we outlined in our alerts of $1,750. That would actually produce a 149 drop since the alert. Okay, so here's the alert right here, 1889, one of the alerts was sent out at that moment. And, you know, $149 drop since then. Now, 1,850 puts were worth $100 by the close. We're buying them yesterday at $15, which for every $1,500 invested, you would have gotten $10,000 back. If you'd like to learn how to do that, click the links below, get more info. Okay, so here's so much for the financial stocks going higher. Here's the result of the Goldman Sachs trading alert. Now, for those of you working with really small accounts, here's the cool part. You could have participated in this Goldman Sachs trade for just $1, like $100. So when the option says it's trading for $1, you could have bought it for $1. That means you could have literally partaken in this trade for just $100. So these $100 trade, you could have sold it today for roughly $4 or $5. So that would have been an easy 400-500% gain. So even, guys, that's the best part about trading options. You get to participate with the big institutional players. And these are the guys that really move the markets, the guys that trade a million shares, the substantial moves in markets like today. Okay, they're not produced by individual investors. And so, most of the individual investors, what they do is they try to go for, penny stocks. They try to go for these dollar stocks, $2 stocks, $5 stocks, clearly because of the size of their accounts. But I just wish more people knew about how to utilize options. So if you're one of those people, guys, there's plenty of videos you can probably learn that I have personally posted on this channel about options and how we do the trades and some of the things that we'll look at. So it's probably going to be a few videos you can watch after you're done with this one if you're curious. Okay, but for every dollar you would have invested here, you would have gotten $5 back literally within 24 hours. So CMG alert, CMG. So that was the Bill Ackman trade, the correlation trade. Okay, so the alert went out right here. The stock traded as low as 434.69 today, closed around 437, 450% gain, guys. Okay, so here's the deal. You're gonna say, look, you're a fortune teller, you're this, you're that, guys. I'm not no fortune teller. I just pay attention to the charts and the patterns. And if there's anything I can teach you, if there's anything I can show you, it's how to identify divergences on the charts. And the coolest thing is, it is not that complicated. You don't have to be a rocket scientist to figure this out. So if you're out there and you're not generating results like I just shown you, the bottom line truth is you can do this. And you just need to maybe adjust your trading strategy just a tiny bit. Maybe you just need a little bit more of an insight on specifically what to look for. But I talk to a lot of traders on weekly and daily basis, and the one common thing I discover is that most of the traders, they lack the specific process on how to select their trades. So in other words, any business, any sort of business, let's just take a look at McDonald's, for example, right? When you go for the drive-thru, right, they don't, no matter whether you're, old, young, whether you're white, black, whatever, right? They ask you the same question. Do you want fries with that? Okay, and that doesn't change. No matter whether it's raining, no matter whether it's sunny, windy, that does not change. So that's how I want you to think about your stock selection process. You want to put different stocks through the same process, and you don't want to deviate from your process. And I think a lot of traders run into a lot of trouble when they start changing their process one day to this, one day to that, and it creates a lot of inconsistency, and it really decreases the amount of clarity of why they're taking the trade. So if you are interested in gaining clarity, okay, what you need to do is, in my view, and you can disagree or agree, I'm just sharing my experience here, okay? Instead of listening to what they're talking on CNBC, try to listen to what the charts and the patterns are showing you. And a lot of times, since I just mentioned, most of the moves in the markets are going to come as a result of institutional selling or institutional buying. Sometimes when we look at the charts, we're going to discover multiple divergences that will point out, for example, when a stock is going higher, while in reality institutional investors are already taking profits. So while a lot of individual investors are getting in, a lot of institutional investors are already getting out. So if you don't want to get caught up in a trap like this, definitely get more information. Get a solid process that you can depend on by observing the charts and patterns. All right, so here's very important thing, guys. I know market crash 2018, 2019, guys, doesn't matter. Okay, market crashes, market corrections, market pullbacks. They happen all the time. So I'm going to reveal to you actually the biggest secret of short sellers. And for those of you that may not know what short sellers are, who the hell they are, well, these are people that make money by shorting stocks. And shorting stocks meaning they profit from the stocks when they fall. And there's a number of ways to do it, but the most profitable way that I know how to do it is by utilizing put options strategies instead of actually shorting the actual stocks. Okay, so the market doesn't have to crash for you to make the money on falling stocks. And I know this is kind of a controversial statement. A lot of you may be thinking, well, I've been waiting for this market to crash, man. I've been waiting for 10 years. I've been waiting since the last crash for this thing to crash. I know what you mean. However, you didn't have to wait this long because these pullbacks, like today, 800-point drop, they create amazing opportunities to actually play both sides of the market. So right now is the time to be short. There's going to be a time to be long, or in other words, buying call options. So I know this is a controversial statement, but the bottom line is this. The market has been presenting insane opportunities to short. And a lot of times when we're dealing with options, okay, it's just like with anything else in life. You get in a good deal. And the basic definition of, trading, of any business, when you look at real estate, what do you want to do? You want to buy low, you want to sell high. When do you buy low when it comes to put options? You buy low when it comes to put options when something is actually going higher. That makes the put option pricing decrease. So if you can identify the best risk-reward scenario when something is actually, a stock is going higher, but you think it's about to come down. And again, it doesn't have to crash for you to make an insane return. Some of the returns I've shown you, some of the stocks, as a matter of fact, you saw Amazon dropped what, $115? Actually dropped $149 since our alert. It only produced a gain of like 800-900%, depending on what strike you were buying. Now, at the same time, Blk only dropped like $30. Okay, so Amazon dropped 140, Blk dropped 30, but which stock produced a higher return? Well, Blk produced a higher return. So a lot of times when we look at options, what's important to look at is how much you pay for the options versus how much you're selling. And in some stocks, the options are going to carry a much higher premium, which is going to decrease your opportunity for a higher return. So what exactly do I mean? The market doesn't have to crash for you to actually make money on falling stocks. Well, here's what I mean. It's very simple. In about 200-300 videos on this channel, we have shown you trades that made money when stocks were falling, when the market was actually going higher. Look, guys, it's just, there's always a balance in the market. There's always some stocks that are going higher. There's always some stocks that are actually dropping. Believe it or not, today the market dropped 800 points, but there were actually stocks that were going higher. Can you believe that? I know it's pretty hard to believe that, right? Well, it should be pretty easy to believe when the stock market is not advancing necessarily 800 points or 300 points or even 100 points. There are days when the market only advances 20 points, which means it's about a break-even situation, right? When, half of the stocks were going higher and half of the stocks were falling to where barely the markets were able to squeeze a slight positive gain for the day. So by definition, there's always stocks that are falling. So you don't necessarily have to have a crash, but the crash clearly makes it easier and faster, for you to profit on falling stocks. So, and if you'd like, there's plenty of videos, again, on this channel that you can review that give you a number of live trades, that give you a number of trades that are broken down specifically why some of these trades, were taken before, let's say, BKNG dropped $200 or Netflix dropped 50 or whatever, right? So there's plenty of information here, so please check out some of the other videos. Now, here's an example I wanted to give you real quick since we're talking about Amazon, okay? The market was going high. Do you remember that day when everybody was screaming, oh yeah, trillion-dollar company? Okay, remember, this was about the time right here when Apple hit $1 trillion and there was a big celebration in the markets. Well, I remember this day clearly when Amazon hit 2050. I remember it clearly because we were accumulating a huge position. We started accumulating when Amazon was at 2000, then position kept going against us till it hit 2050. And by the way, I talk about this in detail in one of the videos on this channel, so you're curious, check it out. Look at this. From 2050 Amazon drops to a low of close to 1,900. That was about $140 drop right here. Well, not many people really talked about it, but when we talk about options, right, here we got a market that tanks 800 points and Amazon drops, 115 or 149 since we recommended shorting it, right? In this case, it dropped 140 bucks as well. So the conditions of the market, however, everything pretty much, the markets were in the green. When you look at, end of August, September, I mean, there was a lot of, pretty much majority of the stocks were going higher. So typically you wouldn't think about shorting one of the best stocks, okay, but it offered you just as good of an opportunity to short it, because when the market generally was going higher, the pricing on the Amazon options were not carrying as huge of a premium. So you would have been buying them for a lot less than what you can actually buy them today, now that the market is crashing. So as you can see, then it bounced again. You had another opportunity to short it, right? And so that takes us actually to the next chart, because we were able to send our alert subscribers this very moment when it was hitting 2050, 2048, we sent the alert to short it. Actually, the video I posted last week, I think I talked about how we're able to nail this black candle type situation and profit on this downfall as well. Now, I know a lot of people, which actually going to lead us to the main question, right, of this entire conversation is, should you buy the dip? Well, a lot of people yesterday were considering buying this dip. Do you see this white candle right here between these two purple dots right here? So the market was stalling for about 2 days. It really wasn't falling, really wasn't going higher, and it appeared like maybe at one point in the day yesterday, the markets were moving higher. Well, there's a ton of information that we process when we look at the charts. I'm not going to go into a lot of details, but to us, it really looked like a pause. And so we were quite confident that the selling was going to intensify, and that's what we communicated to our subscribers that received the trading alerts from us. And so these trades paid off nicely right here when the market was going higher. These trades paid off again where it wasn't clear to anyone yet that the market was just about to drop. So if you're curious to learn how we identify these things, click the links below. Take advantage of the charts and patterns course. Specifically talks a lot about the divergences. There's 6 types of divergences that the course is going to make it very clear to you how to look for them, what to look for, and it's going to give you a ton of examples that you can go back to and refer when you're actually trying to put on your own trades. So here's the ultimate question of the day. Is it time to buy the dip? Hell no. That's the answer. Just nice, short, and sweet, just like that. Okay, but there will be a time to buy this sell-off. So, and if you'd like to be able to identify the reversal on when it's actually going to be the best time to buy this dip, I strongly recommend to take the chart and divergences course. You don't actually have to sign up for the alerts, and actually my goal is not to sign you guys up for the alerts. The main purpose of this channel is to make sure that you have the process to be able to put on your own trades. But if you would like to sign up for the alerts, actually the charts and divergences course is a prerequisite. So simply follow the links in the description below this video. Guys, the markets are generally, October is just a very exciting month for the markets, but I think we got not just October, but November, December, January, February, March. We have a ton of months ahead of us. It's going to be incredibly exciting. And so I definitely want you to take advantage of this knowledge in this course, because it talks specifically about how to short stocks. And it talks specifically about the 3 top patterns. Now, you probably might have taken some courses that talk about, well, the top 3 patterns, on buying the dip, on, or when to get in the position when the market keeps going higher. The very valuable skill that you will need now is to identify how to short the stocks. And you don't want to be, identifying 50 different patterns. What you need is 3 patterns that are proven to work. So that's another part of the course that gives you a ton of examples and the results of those examples you can go back, refer to, identify, and use it for your personal trading. Guys, I'm very excited for you that you watched this video. Take action. Click some of the links below. Get the information that's going to help you identify a clear process on how you can make this year your best trading year ever. I'll catch you guys in the next video.